when you start thinking about how do you position, it's not to make the biggest pile of paper in the world. It's to live a life that you think is cool. Okay. And if you start thinking about it like that, you think, I know they're going to run this system higher. Okay. They're going to run these numbers up. Like there's going to be a time in my life when gold's 5,000. Okay. That's a big number for gold, right? There's going to be a time in my life when the federal debt is $70 trillion. It's 35 right now. 8 years ago, it was like 17. And I said it would double, and people said that can't happen. Believe me, it can happen, and it will happen.
The renowned financial analyst and editor of the Tucker letter, EBTucker, offers investors valuable insights and strategic guidance. In terms of predictions, Tucker foresees a future where gold could reach $5,000 as the federal debt escalates faster. He asserts that such dramatic shifts are feasible within the managed framework of the U.S. financial system, contrary to conventional skepticism. Gold prices rebounded from their earlier losses on Tuesday as yields fell and the dollar retreated from its highs, while another round of U.S. debt ceiling talks ended without much progress. Representatives of President Joe Biden and congressional Republicans ended another round of debt ceiling talks with no signs of progress as the deadline to raise the government's borrowing limit or risk default ticked closer. Despite gold prices surging 26% since October, EBTucker observes that numerous mining stocks still need to catch up with this growth. He argues that this discrepancy has puzzled investors, casting doubt on the allure of mining stocks versus direct gold investments. Contrary to expectations of operational leverage, the sluggish performance of mining stocks has prompted a reassessment of investment strategies within the sector. Historical patterns, including Barron's Gold Mining Index, gained roughly 40-fold from 1960 to 1980, but endured 63% and 69% declines. The 2000 to 2011 secular bear market included a crash during the global financial crisis. Gold stocks could skyrocket over the next few years, but there is a good chance of a severe bear market before 2030. In a thought-provoking revelation during the interview, Tucker envisions a staggering ascent of global debt from $320 trillion to $500 trillion within his lifetime. Meanwhile, he emphasizes the importance of holding gold in one's portfolio, dismissing concerns about manipulation, and suggesting that price suppression would be an opportunity to buy more. Now we present the clips of EBTucker's insights from his recent video with Kitco News. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
As far as the markets go, gold's up. Let's just go back to October. I mean, gold was at a pretty tough spot then. It's up 26%. I mean, that's a huge rise. I mean, it's a massive rise, and the mining stocks haven't moved. And so I think people are having a hard time understanding what's going on here, because you've got, Newmont and Barrick are up about half of what gold is up since October. I mean, Agnico's up the most, so that's kind of like your outperformer. But most of the stocks haven't moved, and the question is, why buy a mining stock when you could just buy gold? I'm not saying like the action to take, but what I'm saying is it's a question to say. The argument from the gold bugs was always the mining stocks give you operating leverage to the rising gold price, but some of the stocks are actually down. I mean, some of the smaller stocks are like way down. For the U.S. system, the constant pressure is access to more debt. What I think people need to realize is stop thinking that there's going to be some market style event that is going to be like a free market style event. This is not a free market. This is a managed system. There are people that make massive amounts of money by having a seat at the control center of the U.S. system. I highly doubt they're going to give up their seat to someone like you. Okay, forget about it. So probably what happens is a panic event is used to usher in the next round of this type of thing, and the numbers go higher. Position for that. Now, if you have a stock that's like a fluffy tech stock that's massively up and all this, I mean, you got to ask yourself, like, how big can this really get? I mean, like Nvidia is bigger than most of the entire gold industry. It's like, yeah, I mean, okay, it's sensible, because if you watch an Nvidia presentation and you watch a gold presentation, one of them is significantly more exciting than the other. But the thing is that what happens if people start pulling money? This Americans hoard, okay? So like, this is a huge culture of hoarding. So what you do is you hoard all this paper. And I've seen this. I've been on corporate, I don't know if you know this, but I'm not on any corporate boards. People seem very confused by that. But I have been on boards in the past. I've seen this hoarding. They hoard stock options. They hoard, it's paper. It's all paper, and they hoard money. And so most people are hoarding this huge sum of money, and they would never think of selling a little bit, right? So like if we get into a panic, they'll think about selling a lot, and then they go to sell, and there's no market there. Okay, if you're someone that's like hoarding a gigantic pile of paper, I mean, every now and then it's helpful to make it a little bit real. Like I'm a huge advocate for spending money. I think people in the US they have like a disease, but they put off joy for a long, long time, with this gigantic pile. And I'm like, the pile is a huge financialized, like, if you put a deposit down in a Vancouver condo and the demand for the building is high, you can flip the contract. Okay. So it's kind of like, as long as there's a buyer there, then you can always do that. Once there's no buyer there, then the contract in the condo is a liability. It's not even an asset anymore. And so my point is that when you start thinking about how do you position, it's not to make the biggest pile of paper in the world. It's to live a life that you think is cool. Okay. And if you start thinking about it like that, you think, I know they're going to run this system higher. Okay. They're going to run these numbers up. Like there's going to be a time in my life when gold's 5,000. Okay. That's a big number for gold, right? There's going to be a time in my life when the federal debt is $70 trillion. It's 35 right now. 8 years ago, it was like 17. And I said it would double, and people said that can't happen. Believe me, it can happen, and it will happen. 320 trillion worth of debt in the world, probably in my lifetime, goes to 500 trillion. Gold price is 23.20 or something, and all the gold bugs are like, it's manipulated. Well, you know what? If they manipulate the price of Audis, I'll buy like 6 of them. Okay. So, I mean, the thing is that you're crazy not to have a little bit of gold. And it's like, you should be hoping for manipulation because if other assets, like your some of these like fluffy stocks, I mean, 55 trillion in market value, let me tell you, that's really high, because if people started selling, that would come down drastically. Like that would come down like in an emergency.
Reflecting on his long-standing interest in gold, dating back to his monthly purchases of gold coins in 2004, EBTucker expresses admiration for the metal's enduring appeal and affordability, noting the low premiums on coins like Eagles. Gold remains bullishly biased, even though it retreated some 6% from its all-time high of $2,431 on April 12th. Momentum shows that buyers are gathering steam, which is visible in the Relative Strength Index, RSI, shifting bullish since the start of May. While acknowledging gold's value as a hedge against economic uncertainty, Tucker emphasized the importance of maintaining flexibility and diversification in one's portfolio. Even a small allocation to gold could prove beneficial, particularly given the general public's widespread lack of awareness about its potential benefits. Let's get back to the interview.
Especially like last summer and into the early fall, I was shocked because what happened was the dealers were telling me that people were selling. I mean, they're still selling. Like the dealers are telling me that, and I'm sure, Kitco would know this better than anybody, but the dealers tell me that they're getting 4 or 5 calls to sell for every 1 call to buy. Yeah. So, I mean, I just was like, that's crazy. I mean, that must be people that own the gold for 10 years and they've had enough and they're getting rid of it. And so, I picked up, some kilo bars and stuff. I just feel like the gold is so cool. I mean, it's like, obviously I was buying, like I've told people in my book, back in like 04, I was buying like 1 ounce a month. Right. I just was like, it was like $400 or something like that. I mean, I thought that St. Gallen coins were really cool. You're not going to be surprised I wasn't in a relationship then because they're actually not that cool. But I thought they were cool. And I was like hunting these coins in stores and stuff. I thought it was great. And so I bought one every month and made like a game out of it. And I just always did that. That's how I got into the gold business. So my point is that like I'm just adding some gold, but I thought it was like super cheap. I mean, I was like, the premiums are really low. I mean, like even right now, I haven't checked this week, but last week, I was looking at some Eagles and I couldn't believe the premium is so low that like I think people are sometimes selling them in below spot. It's really wild. And so that is interesting. I mean, I think you got to be careful though. You don't want to get too much gold. Like the problem with gold is that it really is out of the system. Okay, so like, I'm not as young as I look, but I'm also not, like ready to stop working. So, I mean, you have to be careful because if you have some massive allocation to gold, that money is outside of your ability to keep doing things. And you might need to start a business. You might need to do something for your you don't want to be like lugging your kilo bars or 100-ounce Comex bars
Yeah.
down to the dealer to like trade it in to do trivial things. So I think I say this in my first book. I'm writing another book, by the way. We didn't really talk about that, but
Yeah.
I talk about what percentage is right, and it's a lot less than you think. I mean, if everybody in the country bought 1% of their assets in gold, there would be like a panic. So there'd be like no gold. So I mean, just like the tiniest bit of gold goes a long way. And most people have zero. They don't know where to get it. They have no idea what's going on. And so if you have zero, I mean, and you're watching, gold news, you might want to get a coin. I mean, it's like, what's the worst that can happen? You can just sell it later if you want.
The latest Kitco News Weekly Gold Survey sees industry experts showing renewed optimism about the precious metal, while only half of retail traders believe gold prices can appreciate next week. Considering the prevailing economic uncertainties and the prospect of gold prices soaring to unprecedented levels, how do you intend to integrate gold into your investment approach? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.